Okay, welcome everyone. Let's today lesson will go
Your
through
voice gets
LO2
interrupted a little bit.
learning outcome 2. As you know, me, my name and introduction will be Sanju at you. Hello, is better now?
Yes, now it's okay. Yeah.
Okay, let's please we'll start. So LO2, which is be able to calculate the income tax and national insurance contribution for taxpayer. That will be in our lesson today. We'll go through the personal allowance. We know personal allowance, we don't have to pay the tax, 12,750 now. Application of relief of pension payment, charitable donations, if you're giving and you pay the tax, you can refund it. And calculation of income tax, national insurance, which is according to the classes. And of course, tax planning is illegal, and which we will go through how we can calculate and we manage it. So 2.1, we have calculated the taxable income from employment, investment, and property. So first of all, always whichever year you're looking, of course, you can follow the Finance Act accordingly. So like, we have a 20% tax. This year we have now 12,750. Afterward, if you earn, you have to pay 20% tax up to 37,500. Then it's 40, and then it goes more than 150,000. Then it will be 45%. Okay. So that's we have rates. Then we look around benefit in kind and various other source. We can look around various reliefs we can claim as well. So those we need to be like personal non-saving income 2040 depends on which tax bracket you fall, saving income, dividends income. So all these are incomes we can calculate. Calculate the employment income and investment income. So we've been given the little scenario here in like in 2019 and 20 the salary was 50,000 to 90, and the tax was deducted at source, which was 8,400, and the bank interest was 1,300, and the dividend 7,000, and calculate the Nikki's income tax payable or repayable for the tax year 2019. So we can look around and we can calculate, the salary. We know that's non-saving income. Then we have a saving income there, which is a bank interest 1,300. Then we have a dividend 7,000. So when we add all the source of income, so we can say what is the total income we have for this case. So please hope you can see and hear me. Okay. Yes. If any question, please feel free ask. So
Yes,
that's
everything is clear. Yeah, I can see it very, very clear.
brilliant. Thank you. Thanks for confirming. And we can look around this because this is 12,500 was the personal allowance in the year, which we can claim from the non-saving income, which we did. And then the remaining income is 46,090, which is we have non-saving 37,790. We have a 1,300, which is saving income, and 7,000. And now we can apply the rates. So first, we already paid tax at the source as well, 8,400, which is given in the question. So first 37,500, 20% tax in that year was the Finance Act in 2019-20. So we have a tax liability. Then we have a saving is 40% tax, because if you're a high earner more than 50,000, then your tax is increased to. So that's your 40% tax on 290. So why the 290? If you go back to income was 1,300, but up to 1,000 is your exempt, because first 1,000 you don't have to pay the tax, and anything more than, so we can look around accordingly. We can make adjustments. So 37,500 basic rate we applied, and then the remaining 290 will go 40% tax. Okay, so that's we have a total tax from non-saving income. Then we have a saving income. First 500 is nil. Then next, because we are a higher taxpayer on the saving income, there will be a 840%. Of that, there will be £320 tax on it. Dividend, first 2000 is no tax. But if you earn more than, because we have a 7,000, so if your basic taxpayer is your 7% dividend, but in this case, the dividend will be the 32.5%. So that's we can look around. And then we have income tax liabilities 9561 less PY, which is we paid as you earn, and then we have a tax liability which we outstanding still we have. So that's the way we can manage our tax liability, and that's we can calculate. That was our question, and we can calculate the property income. We can look around exactly the same. So we can look around the total income, property income, bank interest, dividend. We have a non-saving, then we have a saving income, then we have a dividend. We minus the personal allowance, no personal allowance. Yes, depends, because if your income is more than 100,000, every pound you earn more than 100,000, your personal allowance will carry on finish half. So if you earn more than 125,000, your personal allowance will finish. It means you don't have any free limit, so you have to pay all the income, your tax, according to the bracket. So we can look around these first, we have non-saving income 37,500, 20%, remaining state 40%, because that's, if we have more than 150,000, then the remaining will go down. So then saving income, yes. So because it's a higher taxpayer, so that 40% tax will apply first, and then 1,000 will be 45% because that's all in that category. Threshold, and the dividend first 2,000 no tax, next 5 is a 38.1% that was in the year, and that's we have a total tax liability which we supposed to pay. So this way we can calculate the and we can apply. Okay, then we have a 2.2 personal allowance. Personal allowance, the year was 12,500 deduct from the net income, cannot be offset against the capital gain and the loss, if used in this year, the restricted personal allowance. So allowance will be used where adjusted net income exceed then 100,000 reduction 50%, adjusted net income. Yes, so that we can use the formula and we can make no personal allowance is awarded in the adjusted net income exceed 125,000, like I mentioned, according to the tax rule. Okay, so in this case, let's we look the Nikki receive the following incomes from. We've been given the interest rate, and we can look around the salaries. We have a non-saving income, we have a saving income, and then we can look around dividend deductions. So net income 58,590, and then we can look around less personal allowance, and then we have a taxable income. And then we can calculate the tax liability accordingly. Then we have a 2.3, determine the taxable value and the benefit in kind. Benefit in kind is like if you're a company car, if you're getting any house free, you're not paying, that's come under benefit in kind, and that you have to pay. So taxable benefit in kind, living company, accommodation, cars, vans, beneficial loan and the gifts, these all come, and we can look around the standard subsidized canteen is come also, and remover expensive 8,000 if you're moving from one city to other city, you're getting the job, and the employer can give you £8,000, the and towards your job relocate allowance. And if the employees need to be moved to, expense must be incurred benefit, which we need to look around, and we need to make adjustment. Payment limit for if you're living in the UK, £5 per night. If you're living outside the UK, you can claim £10 per night. If the payment exceed the limit, whole amount in the taxable, workable nurseries provided by employers can be at workplace or other, which we can look around. If available for all staff, but not public generally often in work or at work, So we need to look around the facilities you can, and we can look around the benefits, what they are getting, like, the car, your personal allowance can be finished if employee attend full-time course and can receive the tax-free pay up to 15,480 per year. If employees attend a full-time course, can receive the tax-free pay at 15,400. So that's, it's quite good if we can claim. And given in this case, we can look around with the car. We have that the car CO2 level is there, because a lot of benefit. This depends. You have to look around in the tax rate. You have to look around the car value of the car and CO2 emission level. Yes, CO2 emission is that, and we need to look around, and we can calculate by using the formula. Like in this case, you will see which is 29% we have. So like 105 minus 95, because every 107 gram allowance to that, falls in that categories. 105 minus 95 divided by, so we use the formula plus 2% depends on these. What's the tough, So if your diesel is a 4, if your normal petrol, you have electric, which is with different rates. The car benefit, yes, list price minus your maximum, and then we can look around 20,000 should be the benefit is the times by the which we can look around the rates, which we have calculated, like, by using the formula, like here came 29% of the amount which we can calculate towards benefit, unless, implies contribution if implies paying towards the car. And then we have that's, and the fuel benefit, we can look at how much is saving and how much tax, benefit we have and how much they have to pay. And that's, which we can calculate. 2.4, we have calculate the total income, tax liabilities, and the national insurance contribution from the given data. We can look around the page on the gross earning paid on the benefit, class one employee contribution, class 1A, yes, contribution, which we can look around the employer, and I contribution, which is we can look around the paid on the gross salaries, and they're paid, on the gross income, which we can look around implied contribution, implied age 16 state pension, and implied deduct from implied wages and class. Yes, so which we can look around the contribution, and we can look around implied uh, 16 and hours. So we have to look around the areas. Just need to be followed. Any question, please? We all okay? Anyone, any question?
Not for the moment.
Thank you. Okay, so we can follow these steps. And if you want to work towards distension criteria, please, class 1 implied contribution is a 12% on the gross earning between, the amount 8,632 to 50,000. That was in 2019 and 20. Finance Act, we can look around whichever act you will follow. We can follow 2021, 22, but it's better to be, we can explore the latest one. So when we'll do the assignment discussion, I'll go through the latest rates as well. So we'll apply both. So the class 1 implied contribution 13.8% on the gross, all the gross earning above 8,632, and but the employer also have a up to 4,000 pound allowance as well, implied allowance, but that's one allowance. Employment allowance, yes, yes, 3,000, and available to deduct, from the total class 1 employer liabilities, which is employer need to be contributed towards your, and the NI goes towards your pension contribution, which is state pension, and 30.8% taxable benefit, and the fair value being used for the tax purposes. Yes, so there are a lot of examples. Salary benefits we have, what is in national insurance, yes, depends on the classes, you will see. So in our assignment, when we'll do merit criteria, we can embed, those examples, we apply the rates, so that will help, to address the learning. Then we have a distension criteria, demonstrate how the relief of the pension payment or charitable donations are applied to the income tax calculation. So we can look around charitable giving, pension schemes, so payroll giving, gift aid, and occupational and personal. Thus, we can look around the maximum contribution and the methods which we need to be look around. Uh, we can use any example of your choice, which I'll give you a lot of examples of those rates we can apply. But we can choose the example from for various sources. I'll give you the books as well, share with you, and we can use for assignment purposes. No stress. We'll do assignment discussion as separately, and that's which will go through all the learning outcomes again. And I'll give you the rates, and we can apply those accordingly. Okay, so maximum contribution, method of the relief. So these are all methods we can explore. Tax efficient, charitable giving, of course, payroll giving, gift aids. Yes, if you're giving to donations, of course, you have to think about, various thresholds which we need to be explored, and always look around, and we can, of course, we can plan things. If you're giving and you keep your receipts, and the gift aid scheme, employment income. So we can look around employment income, personal allowance, chargeable. By personal allowance is less because if you have a benefit in kind like company car, your personal allowance can be reduced. Okay, so income tax, and we calculated, and of course the basic limit and the high limit, and then we can calculate the tax liability, like and you will see the working here as well, which is quite good to please explore. We have a gross gift aid contribution, how much we have that in this case. So please we have to use the formula gross, because the tax is what excluded, that was 80% left, whatever the amount we have times by 100 divided by 80, because the 20% tax was deducted at source. So our gross amount is 6,500. Adjusted net is there, less the limit is 100,000. For personal is the limit of the benefiting, and excess which we can look around how much they have, and 50% excess can be, and revised personal allowance should be reduced, because if your personal allowance can be reduced it, because if you earn more than 100,000, every pound you earn it should be half. So you will say the threshold for higher and additional rates apply according to the gross gift aid contribution and the revised threshold. So we can calculate accordingly. So the types of pension schemes that we can use, the pension and occupational and personal pension, employer contribution and reliefs, those. But a lot of pension rules also change. So please, we need to be consulted accordingly when whichever year you will be. Of course, that is a huge, which is working in HR as well. Gross, George had the employment income, which we can look around 53,000 in 2019 and 20. Calculate the George income tax liability. So he paid employer occupational pension scheme. He paid 400 contribution to his personal pension, and we can see how much employee income, less tax contribution, and how much is employment income. Then we have personal allowance, which we can look around, adjust taxable income, and then we can calculate our taxable liability. So like in this case, you will see how much payments you have to make, how much pension contribution. Okay, so please, for your distinction criteria, always know I am the crime fail in life, no crime, so we can work toward the distinction criteria. So please, here are the few links for the reference, and please I will. So please, it's good to be, if you want to set up account, a couple of you heard about open tuition, yes.com, and look around TX, yes, tax, which is F6 exam of ACCA. Yes, so please, you can and explore, and that will help you as well. Right? Okay, any question? Hello, any question from anyone?
Not from my side.
So, thank you. Thanks for confirming. And please go to explore. We have books, which I'll share with you and good to use. I can share you here on the in 1 minute, and that's you can use. And it's good to be if you want to watch some and go through the activities by using my tuition. There you can download the booklet, yes, latest booklet, and you can follow accordingly. That's quite good too if you're really interested and explore more. But of course, if you don't have an exam, it's your assignment. We can take the examples, we can read the criteria. Yeah, that's the crucial which we can and we can go through accordingly. Okay, so I'm going to send the resources. Okay, so I'll give you the Kaplan one. Yeah, so I'm giving you share with you the booklets. So please you can download in here from your end and that will help you as well. So thanks for attending to this. So today we discuss about LO2, how we can calculate the tax liabilities in given situation, and hope to see you all during our next lesson when we do LO2. Thanks for attending. Have a nice weekend. Thank you. Please,
Thank
if you
you. Have a nice weekend as well.
Thank you. Bye-bye. Anyone, any question? If you have, please, you can ask. Otherwise, we'll keep up to here. Thank you. Thanks for attending. Have a lovely weekend.